What's up, YouTube? Welcome back to another episode of KJD Investor. This is yours truly, KJ, and without further ado, let's go ahead and hop into the portfolio. Now, as you guys know, it's Sunday night. Every Sunday night around 8 o'clock p.m. Eastern Time, they cut the markets back on. As you can tell, that's what's been happening. Now, let's go to the live update. Okay, looks like there's a sell-off going on in the market tonight, y'all. What does that mean? Looks like somebody, the red is, we're more in the red, and right here the count is saying that we're down 0.11% in the past hour. That means people have been selling off in the market their shares of whatever it is. They're selling off, right? The investing account sitting at $57,050 right now. Like I said, we're down in the past hour 86. Well, just changed to $87. That's cool. Nothing to be alarmed about. We got some Bitcoin. It's up to 87,000 right now. Doge is at almost 16 cents. We got Ethereum at $1,611. And Avalanche is at $20.03. Surprisingly, all my crypto holdings that I currently have are in the green. So let's continue to hope that they build. Now, stocks and ETFs, the cream of the crop. Earlier today, well, at the close of business on Friday, it rolled over until today, Sunday. The market had closed with stocks a little bit higher than what they are now. But since the market kind of opened back up, like a pre-market opened back up at 8 o'clock tonight, you see all your big tech companies, Magnificent Seven, minus Tesla, because I don't own any Tesla anymore. I used to own Tesla for a long time, a long-term holder of Tesla, but I sold Tesla at a profit. When I was able to get it up into the profits, I was able to sell it and make some money off of Tesla, man, because I don't want to hold Tesla right now. It's just way too volatile, way too unpredictable. Their CEO right now is dabbling with politics, and so that makes anytime you researching history, CEO of a good company or a major company, I'm not sure how I got there. Any CEO or anything like that dibbles and dabbles in that politics, it affects the stock price of that company immensely, and that has happened with Tesla. Me personally, I still think Tesla is the EV company leader of choice. I think they still lead the EV sector of cars, but you know, it just has to be desired. And right now, I don't see that company being well desired. So I kind of keep my money out of that. Anyway, just kind of give you guys an update on my positions right now. As you can see, Amazon is at $171 per share right now. Tonight, I'm at 4.22 shares. Market value is $725.92. Average cost is $167.82. And total return right now is $17.24. I'm up 2.43% on the position. And guys, like I said before, our tech sector might be taking the biggest hit right now to these tariffs and recession-proof type thing, but they might take the biggest hits, but they also create the biggest gains, the fastest gains in the technology sector. I'm here to tell you, man, listen, and I'm going to just be honest with you. These are good, solid companies. The Magnificent Seven, like I said, the Magnificent Seven minus Tesla, these are some of the best companies in the world, and they're at an all-time low right now. So it's a really good time to create and build wealth for you and your family. This is a good time to grab some things on discount, some great, amazing stocks on discount. I think, and I'm gonna tell you what I'm gonna be buying more of. Is this right here, SPLG. SPLG is my SPDR portfolio S&P 500 ETF. And right now it's sitting at $61.50. I have over 241 shares of SPLG. My market value is $14,844.59. Average cost is $64.27. And so total return right now is a negative $669.53 or a negative 4.32%. Y'all, SPLG hasn't been at these levels in a long time, $61.50. I don't think it ever was that low when I've been trying to get my portfolio even started, because my average cost is $64.27. And so now I have bought SPLG when it was like $62, $63, $64, $65, all the way up like 70 something, whatever. I've bought SPLG even at the higher prices. That's what pulled my cost basis up, my average cost basis. But at the same time, by it being $61.50 right now, this is an opportunity to buy and actually bring that cost basis down low. And that's what I'll be doing, because I'm going to tell you why I really, really enjoy investing in ETFs like SPLG, ETFs like FTEC, and ETFs like SCHD for that big dividend growth. The reason I like these three ETFs is because I don't have to be the expert. I don't have to know what stocks to pick. I don't have to know what's the PE ratio of this company, that company, who's gonna pay the biggest dividend. I don't have to know these things. Who's the CEO? Are they gonna get rid of the CEO? And what's going on with this company, that company? I don't have to be the expert when it comes to picking stocks. When I pick ETFs, when I invest in the ETFs. ETF investing, guys, I know a lot of you guys who follow my channel, you are interested in becoming financially free, well off, wealthy, even rich, whatever you want to call it. And I'm here to tell you, investing in ETFs like SPLG, which is my standard, that's like my base ETF. I'm trying to think of the word. Foundation. That's it. That's like my foundational ETF, SPLG. If all else fails and nothing else goes right, I'm gonna invest in SPLG for my foundation. My growth ETF is FTEC. It's over 329 tech companies in that fund. So I can have exposure to NVIDIA without actually buying NVIDIA. I can have exposure to Microsoft without actually buying Microsoft, and so on and so on. As a matter of fact, that ETF, FTEC, and SPLG, they both give me access to Tesla. Even though I just told you I don't directly invest in Tesla, I still think it's the #1 EV car company in the world. But right now they're going through, like I said, a bit of a transition. When you got a CEO of a company like that, dabbling into politics, that stock price is gonna suffer. That's just what history tells us. But what I'm saying is, even though I have FTEC and SPLG, and I don't directly invest into Tesla, I still get exposure to Tesla, so especially when they make their gains. When Tesla goes higher highs, we got all-time highs in Tesla, I will be having as my stock price, my ETF price will reflect that, because I have exposure to a certain percentage in that ETF fund for that stock. So, but when that stock tanks and it goes down, I have in the S&P 500, I have a whole nother 499 other companies that's gonna help pull that one bad company back up. I won't lose as much. You see what I'm saying? I don't have to sit there and wonder how I'm gonna sleep at night if I got money in the ETLs versus the individual stocks. Now, for me personally, I'm not a beginner. I've been doing this for a hot minute now. So I do have individual stocks a part of my portfolio, but my main investing is done in the ETFs. You can become an ETF millionaire, guys. That's how you create generational wealth. That's how you make passive income. That's how you're able to pay for your goods and services with your portfolio, not with your job. having a millionaire or $500,000 status in your ETFs, having $750,000 in your ETFs, having 2.3 million in your ETFs. That's a way to establish financial freedom as a millionaire. So don't count out the ETFs, y'all. I know sometimes it's not as exciting as owning Google. It's not as exciting as owning NVDA, owning Palantir, owning Walmart directly, owning Apple or Amazon or Microsoft. But if you own that ETF, SPLG, FTEC, you're going to get exposure to all of those stocks and more, what I just named, and more. Like I said, you're going to get the exposure that you need to those different stocks in order to see the gains that you want to see. So that's why I like ETF investing. I like not having to be the expert. I like not having to pick and choose which stocks stay, which stock go. The ETF can handle all of that for me, so I don't have to worry about that. And you guys already know there's plenty of videos on the internet about SCHD. That's my number one ETF for paying out those dividends. So I have a dividend paying ETF, a foundational ETF, and a high growth ETF. That FTEC, FTech, all technology companies, big boy technology, information technology. That is my high growth fund. If you want to see your money climb higher heights the fastest, you want to build up your position in FTEC. But y'all, listen, the market is back red, which is not bad. I'm just here to let you know it's time for us to climb this money tree, time for us to create this wealth. Over in the traditional IRA, I got $37,525.88 right there. In the buying power, got $19.95 and 39 cents. So we're just waiting. I also still got my NVDA cover call right here. And things are looking really, really good with that. I've made over 69% profit in the cover call. So I got, I seen a video that said anything over 50% was like excellent. So I got a 69% return thus far, which I feel like if I leave this cover call all the way into expiration, I should make it with no problem. This thing expires May the 2nd. And the strike price for NVIDIA is $145. So we'll see. Anyway, NVIDIA is back down to $100 a share. Sounds like a buying opportunity to me. I think that's something that we all should, consider, getting if you want to expand your net worth. I got some Palantir. We got 26.80 shares of Palantir. Metal's on sale for $499.89. I can't remember the last time metal was even in the 400s. Right now it's at $499. So that's a big shout out to Metal. Metal is really a really good company on sale right now. MicroStrategy is up to $326.40. I got 15 shares of MicroStrategy because what's his name? Michael Street, something like that. He got that he's buying up all the Bitcoin. So that's why MicroStrategy, his company, continues to prosper. Got 15 shares of MicroStrategy. Market value is $4,890.45. Average cost is $283.49. See, no, check this out. My average cost for this stock, even I got 15 shares, my average cost is $283.49. Right now, this stock is trading at $326.49. That's like a difference of almost like $40 per share upside. And look at the total return, $645.15 or a positive 15.17%. MicroStrategy is doing this thing right now. I'm telling you. We got Palantir Technologies. You guys know Palantir got an earnings report coming up, and I think they just smashed it, to be honest. So I'm waiting to hear back about Palantir. I got 26.79 shares of Palantir. Market value is $2,524.79. My average cost was $75.94. And we're up right now. Total return $489.50 or a 24.05% return in this position. I'm thinking about doubling down on this position right here. I got 26.79 shares. So about 26.8 shares of Palantir. And I feel like doubling down on that position. So I may or may not do that, but I do feel like Palantir with their new governmental contracts is going to be one of those stocks that bust through the roof, man. Just wait till the market get back on higher highs like it was before. You'll see what I'm talking about. And then here we go, $94,617.38. It's the total right now. I got over 12,000, another 12,100 something dollars into the Fidelity investing account. Just collecting more and more wealth over there. I'm selling cover calls to kind of hedge against the inflation, hedge against the tough Terra talker 47. You guys know who it is. And I'm also thinking about scaling the portfolio, because that's what we're here to do. Excuse me. I'm trying to scale the portfolio by selling puts. So you guys tell me in the comments below exactly what you think about that, how you feel about that. Me selling puts. Like I said, I got cover calls. The difference in selling puts and selling cover calls is cover calls means you actually have the stock that you can use as collateral. But selling puts means you actually use your money to grab the amount of shares of a stock that you may want. You use the cap. If you got abundance of cash, you sell puts. If you got an abundance of the stock, which means at least 100 shares, then you sell the stock. You use the stock to you use cover calls to help create premiums that you get to keep if what you think will happen in the market happens, and then vice versa with selling puts. You still get a premium for that as well. But okay, guys, that's it for this episode of KJ the Investor. Make sure you like, comment, subscribe. And if you haven't subscribed, y'all consider subscribing to the channel, man. I really appreciate all the newcomers. I appreciate all the comments. And I appreciate everybody taking their time out to check me out and writing down in the comments below whatever it is or whatever you want to see next, or however you feel about this content. Make sure you let me know down below in the comment box. Until next time, this is KJ the Investor, over and out. Peace.